Hey everyone, it's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ Stocks, crypto assets, news, and interviews. Today is Monday, November 20th. Hope you're doing awesome, and I hope you had a great weekend as well. In this video, we're going to be discussing the stock AYR, so AYR Wellness. We'll be looking at the AYR chart, and we'll go over some analysis on that as well, but I want to dissect their Q3 2023 earnings. We'll go through and review it, go over some highlights, my thoughts and opinions, and then, like I said, we'll take a look at the technicals in the chart and what to expect in terms of price action in the days, weeks, months ahead. Obviously not financial advice. This is for entertainment and informational purposes only. And full disclosure, I do not own any AYR at the moment. It is on my radar. And with the prospect of Ohio and Florida, it's certainly looking like it could be a nice under-the-radar play for long-term success. Let me know in the comments below if you hold AYR or if you think I should seriously look at adding this to my portfolio. And if you haven't seen my top 5 holdings, MJ holdings, or my entire MJ holdings video, I do an entire MJ holding and portfolio with percentage breakdown, and you can check that out and let me know your thoughts and opinions on that, and let me know, like I said, if you hold this in your portfolio. But before we get to all of that and more, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. Also, make sure to give us a follow on X, which is formerly Twitter. The handle for that is @GroupPow. Going to be using that as my social media platform of choice going forward. And also posted on X that I'm going to be doing a Black Friday POW merch sale. So that is now live. You can use code POWBLACK at checkout to receive 10% off until November 27th. And that's just powmerch.ca. And then, like I said, you can just use this code POWBLACK. And as a thank you to the community, love each and every one of you who have supported me along the way. Got close to 30 orders now and getting a lot of great feedback from it. So like I said, it really does mean the world to me. And like I said, help support the channel as well. And then speaking of Black Friday sales, there's no shortage of them. I actually just purchased the Trading View, so the charting tool that I use. I got the premium one, so it was 70% off, and you get an extra month for free. So it came to $321 Canadian taxes total for those that are interested. So that's $217 USD, which is phenomenal. And I'll put a link to this in the description and in the comments section below if you use my link. I do get a kickback, full disclosure, and help support me in the channel again. But you can get that deal before it's gone. This is massive. You got 4 days, 5 hours, 27 minutes and change. Also, Ledger's doing a Black Friday giveaway. So if you're interested in a hardware wallet, you can check that out. They're giving up to $50 in Bitcoin. And again, all the links will be in the description to get those best prices. And then diving into the article here. So this was back on November 16th. I've been super busy the last couple of weeks and expecting, my girlfriend and I, like I said, we're expecting our first child into the new year. So things have been pretty hectic, but I did want to come on and do a review of this because a lot of people are requesting it. And like I said, I think that this company is going to be very successful if they play their cards right, and especially if we see Florida adult use on the ballot for 2024, which I think there's a good chance that that could happen. And then I think it could go live in 2025, adult use sales. And then I think Florida is going to be the biggest market. And I've been saying that for a while. And just like, I think a week or two ago when Kim Rivers, CEO of Truly, was on, I think it was TDR, it basically said that she thought that it's going to be the biggest market, like maybe even in the world. And, you know, I agree. It's going to be, in my opinion, the biggest market in the US. Going to be very, very important. So AYR Wellness reports third quarter 2023 results. Revenue was up 5% year over year to 114.4 million, excluding discontinued operations. So they did miss in terms of revenue estimates. The analyst estimate was 120.13 million. They came in at 114.39 million. And then EPS, they had negative 0.24, but that was a beat. Even though it was negative, they were forecasting negative 0.2906. So it came in with a pretty nice beat there in terms of EPS, but negative nonetheless, and did see a loss. And then, like I said, pretty big miss there in terms of revenue. And they've been missing revenue for a long time now. They haven't beat since March 17th, 2022. So that's 7 in a row now where they've missed. So I think, and then they put 127.27 million next one. So I guess they just continue to exceed, they want them to exceed expectations, but pretty hard to beat whenever they keep upping it. 127, that's going to be difficult to beat next quarter as well. Sometimes they revise it though, so we'll see closer to that, but right now it's tentative for March 7th, 2024 for the next one. And then everything For these financial results, the third quarter ended September 30th, 2023. Everything is presented in US dollars unless otherwise stated. The following financial measures are reported as results for continuing operations due to the sale of the company's business in Arizona in March 2023, which are reported as discontinued operations. All historical comparisons have been restated accordingly. So the CEO and President, David Goubert, I think that's how you pronounce it, we continue to execute on our optimization initiatives during the quarter, as reflected by another strong period of year-over-year adjusted EBITDA growth and cash flow generation. We also continue to lay the foundation for AYR's long-term revenue growth and profitability, bolstered by our recent work to reach agreements with creditors, which, when fully consummated, will result in the extension of maturities of nearly $400 million of debt in aggregate by 2 years. So that is a pretty big concern, but upon closing of the transaction, AYR will have no meaningful debt maturities until 2026, so they're basically just kicking the can down the road. And then, as we know, if we get rescheduling to Schedule 3, which I think is very possible in 2024, that's going to remove 280E overnight, and there'll be a lot more hitting the bottom line. And in my opinion, they'll have a lot more money at the end of the month instead of more month at the end of the money, and then they'll be able to pay this down a lot quicker. So I think times are about to change in a big way and for the positive. And we're going to see the industry absolutely explode if we get rescheduling to Schedule 3 and 280E goes away, right? That's the biggest problem right now hindering the sector, and especially for these multi-state operators, these NSOs. So, and an additional $40 million of the cash proceeds, providing a clear runway to execute our optimization initiatives and generate consistent long-term growth. As only 15 of the 88 dispensaries across our footprint are fully ramped adult use stores, AYR is well positioned to take advantage of legislative catalysts in states like Ohio, which we know just approved 24th state to approve adult use sales. They're talking about all hands on deck to do some amendments to that, but we'll see. Time's running out. I think they only have like a month to do it. But that was voted last week to legalize adult use MJ, as well as Florida and Pennsylvania in the near future. So Florida is going to be huge. The conversion of these stores would reflect a 6x increase in our adult use retail footprint, which is huge. So we expect the execution of our objectives to position us for revenue growth, adjusted EBITDA, margin expansion, and free cash flow generation in 2024. And then some quick highlights here. Actually, I'll just go over the Q3 2023. So revenue, $114.4 million, gross profit, $48.1 million, adjusted gross profit, $60.5 million, operating loss, negative $1.5 million, adjusted EBITDA, $28.4 million, and EBITDA margin was 24.9%. So some quick third quarter highlights: announced agreement to acquire a third Ohio dispensary license. They reported Q3 retail transactions up 21% year over year on a same store basis. Added Michael Warren to the company's board of directors. Announced 3-year exclusive licensing and retail agreement to bring Kiva Confections, or Kiva, to AYR 62 plus Florida dispensaries. So another, obviously Trulieve, the biggest one, but AYR Wellness, 62 plus Florida dispensaries. Wow, this is, like I said, the potential here is enormous if we do see Florida. I mean, it's just a matter of when, not if. But if it happens, if we get Florida on the ballot in 2024 and that happens over the next year or two, this could be a massive play. They changed expense allocation methodology, resulting in an expense reclassification from SG&A, Sales General Administrative, to COGS, cost of goods sold. That resulted in 300 basis points reduction in adjusted gross margin in Q3. Recent highlights: announced appointment of George DiNardo, a new COO. Opened 10 Florida stores thus far in 2023, bringing its Florida store total to 62 open locations to date. The company plans to exit 2023 with a total of 64 stores in Florida, compared to 52 to start the year. Opened 2 retail locations in Ohio, in Woodmere and Goshen. AYR has the future rights to ownership of both dispensaries, subject to regulatory approval. Last week, Ohio voters passed a ballot initiative to allow adult use sales. So a couple weeks ago, AYR's 58,000 square foot Ohio cultivation facility is operational and equipped to produce over 40,000 pounds of biomass to meet future adult use demand in the state. And then some quick financing and capital structure updates. Company deployed $7 million of capital expenditures to the third quarter, ended the quarter with a cash balance of $72.8 million. So they have a cash balance of $72.8 million. Company has approximately 76.7 million fully diluted shares outstanding based on the treasury method calculation. So if you take the loss and divide it by the shares, that'll give you the negative 0.24 EPS. and then they just go over about the 40 million new money debt financing. And upon completion of the recently announced transactions in 2023, AYR will have retired or extended the maturity of nearly 400 million in debt in the aggregate by 2 years. So, like I said, just basically kicking it down the road. But it's, like I said, if we get rescheduling to Schedule 3, removal of 280E, Florida on the ballot, and then potentially for adult use going live, just like Ohio, like I said, this could be a massive under-the-radar play. And like I said, let me know if you hold this in your portfolio. Let me know what you think of these. Let me know. There's the loss per share. But let me know what you think of this earnings. What was your major takeaway? And let me know if you hold it in your portfolio. And let me know if you think I should add it to my portfolio. I'm seriously considering it. I'm kind of waiting until the end of the year, until tax loss selling is over. And then into January, I'm a Canadian, so I get additional, I think it's $6,500 worth of contribution room to my TFSA, my tax-free savings account. So a lot of that contribution room I'm going to be saving for MSOs, multi-state operators, and U.S. producers and U.S. companies. I've got a lot of LPs right now. Like I said, check out my entire MJ portfolio breakdown with percentages. It's definitely heavily weighted toward the Canadian names, and I'm going to be focusing on adding more MSOs. And that was just because the Canadian names pulled back more quicker and the US names were catching up, but the whole sector moves together, not down to the second, the day, the minute, but overall on a weekly, monthly, yearly basis. I figured that most US MJ would come down 80-90% from February 2021 and all-time highs, would follow the rest of the sector because the sector moves together, right? It's just the way it works, right? So like I said, in terms of the technicals, I said we would look at that at the end, so the video is getting a little bit long, but we'll take a quick peek here. So after the low there at 107, which was set on November 1st, we are now up over 100%. So nice swing trade there, playing off $1 psychological. You could have entered with a stop below $1, and that was a massive swing trade opportunity. Actually, looking back in hindsight, I probably should have entered there, at least for a swing trade off daily oversold. So the daily oversold bounce, once we started the daily oversold bounce here on November 1st, that was the time to go, right? You could have set your stop at like 99 cents or, 89 cents, allow a little bit of wiggle room. And essentially, if you got it there at, and it was, what was the low there? 108, 110, and 107. So it's basically a double bottom. So nice double bottom fish play, and then playing off $1 psychological. So even if you set your stop at 98 cents, you would have risked about 7-8%. If you did 89 cents, you would have risked about 15 to 17%. To make upwards of 100+%. So that's great risk to reward opportunity, right? And then, like I said, playing off that $1 psychological, that was a no-brainer trade looking back, but you can't win them all. But like I said, came off heavily daily overbought based on the HHS recommendation, monumental news that came out, and we saw a massive upside, went from 79 cents to about $3.29, and 319% roughly. And then we pulled back, and then in terms of the fibs, we actually dipped back into the golden pocket there at the 618, and we actually dropped below the 0.786. So again, massive buying opportunity here anytime whenever you get below the 0.786. If you're very confident in the company long term, this was pretty much a no-brainer. And like I say, coming off daily oversold as well, we already had the daily EMA 12 and 26 bear cross play out, and yeah, that was a great entry for sure. In terms of the weekly time frame, we're just looking for a weekly higher low, and it is now set there at 107. We started the weekly bounce, and we have a lack of resistance, 230 and then 329. And then something that happened for the first time in the stock history is a weekly EMA 12 and 26 bull cross. That was another signal as well that we could see massive upside. And then when the shorter term's below the longer term, the yellow is the shorter, the 12 period, exponential moving average, and it's a lagging indicator, right? It uses price. And then the exponential 26, so the longer term was above, and when they crossed, that is bullish, and we saw tons of upside. See here, when the shorter term was above the longer term and they crossed, that's bearish, tons of downside, right? But one thing I want to share here as well is on the monthly time frame, AYR is one of the strongest charts out there. Curaleaf super strong as well. We have a low, high, higher low, and higher high, and right now it's holding that 345 double bottom basically by 3 pennies at 345. So it's still in a monthly uptrend, but AYR, I would say, is probably the strongest chart out there. I would challenge you to find another stronger chart, but you can see your low, high, higher low, and higher high. We're looking for another monthly higher low, and we have key monthly support there at 79 cents. As long as that holds, we're still in a monthly uptrend. But if we can see a monthly candle close over EMA 12 there at 236, we have a lack of resistance all the way up to EMA 26 at $8.09. So this could be a monster monster swing trade and coming off monthly oversold as well. It's actually been more oversold in its history than anything. For about 80-90% of its history, it's been in the monthly oversold. And if you know nothing about technical analysis and you just buy when we're closer to oversold around 30 and below, and then sell when we're up near overbought 70 and above, you do better than 99% of retail traders out there. So like I said, this monthly uptrend is what the rest of the sector wants to do. The more names that confirm monthly uptrends, producers in Canada, US, and then also, you know, retailers in the US and Canada, ETFs in US and Canada, the more names that do so, the better, and the more confident we are that the bear market is over. But you can see here we're seeing a bull cross of the stochastic. Usually the stochastic crosses first. In this case, it did here on the way down. It was a bear cross, black above the red. That was bear cross. It was the leading indicator. Then we had the price close below the 10-week moving average. That was caution signal number 2. And then we had the MACD bear cross. And then usually on the flip side, we see the stochastic go first. Then the price gets above the 10-week moving average. And then we see the MACD. So again, same thing here. We're having the stochastic cross bullish first. Then we got above the 10-week moving average. And then we're seeing the MACD bull cross. So this is looking really good. If we get that MACD bull cross follow through, this thing could see massive upside. Like I said, 230 resistance and then 329. And that's USD on the OTC. And then in terms of the weekly moving averages, we held the 50 weekly on that pullback, and we have a lack of resistance until 438 at the 100 weekly, and then the 200 weekly there at 1163. We're also coming back down and testing the 200-day moving average here on this pullback after the HHS recommendation and monster move. And we had a golden cross with the 50-day below the 200-day moving average and crossing. Another signal that, you know, when that happened, the price was at around $1.17, and we went to, like I said, $3.29. We had a death cross here, and you're wondering, oh, that, you know, that's just luck or that's just coincidence. Okay, well, it happened here. And last time we had a golden cross, price went from about $8 all the way up to $37. Then we had a death cross with the 50, the shorter term above the 200-day, the longer term. When that happens, it's a death cross. Price went from about $28 all the way down to, you know, 50 cents. So now we're seeing a golden cross again, and we're way more beaten down than we were last time. And like I said, rescheduling, removal of 280E, and Florida potentially on the ballot, Ohio, Pennsylvania. Oh man, I'm excited. Let me know in the comments if you're excited. But hopefully you found this video helpful. If you did, like it, share it with your network. I would appreciate it. I love each and every one of you. Hope you have a fantastic evening. We'll see you on the next video, and make sure to take advantage of all the Black Friday deals. All right, see you on the next one.